Hello and welcome to another Charts from Oliver Velez session. Of course, my name is Oliver Velez, and today, once again, I'd like to talk to you about ALCOA Inc., one of my most recent love affairs. I recently did a video educational session on ALCOA, I think last week sometime, to talk to you about the great prospects I feel this stock has. The stock is currently trading in the mid $16 range, and I believe it has potential to at least double from these current levels over the next several months to a year or so. In my long-term wealth-oriented plays, I look for doubles at a minimum and perhaps triples and quadruples. I believe on the upper end of my potential target, Alcoa can move as high as the mid to high $40 range. But I continue to have a love affair with the metals. Gold and silver is performing very well today after a much-deserved pullback. I also believe and have faith in a lot of the other metals. Platinum, palladium, and certainly aluminum, which Alcoa does everything aluminum, involved in everything aluminum worldwide for the most part. Once again, I'd like to point out that I have two key moving averages on this daily chart. The blue line represents the 8-period moving average here, and the goldish line represents the 20-period moving average. Now, if you look very carefully, Alcoa really recently, in let's say the beginning of December to middle part of December, really started to get going in earnest here, breaking above all of this key area of congestion. But one of the key things I'd like to point out for every one of my followers is that one of the first things you have to do as an astute chartist is to find on your chart the most bearish bars on the chart. And what I've done on this chart is actually point them out to you. This bar that occurred in the latter part of October, and let's call it October 28th, was the most bearish bar on the entire chart. That I'm immediately drawn to. Where is the spot where the bears gave it everything they had? Where on the chart does it demonstrate where the bears threw everything they had at the stock, everything including the kitchen sink? And on the 28th of October, we find that bar. You cannot find a more bearish bar on this entire chart than this bar here. This is where they made their biggest stand. This is where the bears gave it their all. This is where the bears empty their pockets, so to speak. The second most bearish bar occurred prior to that in the beginning of October. It's not quite as long as the most bearish bar, but it's certainly fat, it's certainly solid, and mostly red from high to low. This represents the second most bearish bar on the entire chart. The third most bearish bar occurred much later in the beginning of December. And as you can see, while the bar is nice and long, it's not quite as full from high to low in terms of its redness as the most bearish bar and the second most bearish bar, but it's certainly a mighty footprint created by the bears. So these three bars represent by far the most bearish stand the bears produced. Now, if you go back to the most bearish bar, what happened immediately after? Immediately after, the bulls completely negated the bears' best. This is the best that the bears could deliver. This is the best that the bears could produce, and yet immediately the bulls come back and negate their best. That is your first sign that the balance of power has shifted back to the bulls from the bears. And as you see very clearly, the low of this most bearish bar was never seen again. This was the initial turning point. That was your first sign that a shift in the balance of power was occurring. The third most bearish bar produced here at the beginning of December was taken out when? It was taken out by this bar. Isn't this bull bar the bar that finally overcame the high of the third most bearish bar on the chart? Each time an incredibly bearish bar gets taken out by a bull bar, it must grab your attention. It is a noteworthy event. And then look at the second most bearish bar. When was this bar taken out by the bulls? Well, it was attempted to be taken out here, didn't it? and it ran into a bit of resistance, and then the stock pulled back to its rising 8-period moving average. And but this bar, the following bar, the rebound off the 8 accomplished that worthy task of taking out the final most bearish of the 3 bars. And so the point I'm trying to make to you today is that institutions accumulate in spots. They don't accumulate all at once. They quietly do it on October 28th. And then they rest for a while. Then they quietly do it again, let's say on the 3rd of December, and they rest for a while. And then they quietly do it again, let's say on December 11th, and they rest for a while. And then they quietly buy more on the 21st, and they rest for a while. You see, they cannot buy everything they want all at once for fear that they raise the level of the water too quickly, and traders like you and me spot them, but the astute ones spot their gradual footprints, irrespective of their attempts to hide them with spaces of no activity between their buys. Every astute market player who understands that the only way to make money is to jump on the coattails of major institutional buyers and sellers must hone his or her skill in terms of spotting their footprints when they're accumulating in a big way and when they're selling or distributing the shares in a big way. And this is one of the key signs of knowing if institutions are quietly going in or quietly coming out. Whenever the most bearish bars on the chart are being taken out by bull bars, bull bar here takes out the most bearish bar on the chart. Bull bar here takes out another major bearish bar in the chart. Bull bar here takes out another major bearish bar in the chart. Whenever you spot these occurrences, you can be rest assured that you are not alone in your interest in this stock. You can be rest assured that you are playing with the current, with the power, with the almighties that rule the markets, with the institutions, with the flow, not against it. You see, a lot of traders fail to recognize that the only way to make money in the markets is to have bigger players buy after you. And so what better way than to spot a stock that is being accumulated by bigger players with a lot more money than you have? But very quickly before I'm done, I'd like to point your attention to the current occurrence in ALCOA. As you will recall in my first recording, I was looking for ALCOA to sort of drop into the $15 to $14.5 area, but it doesn't look like that's happening. So another alternative is to buy the very next time ALCOA takes out another bear bar. Now, isn't this a pretty decent, solid red bar? And isn't today's action, isn't today's action taking that out? There are two ways, only two ways to buy. One way is to buy on a pullback and then wait for a red bar to be taken out. And the other way is to buy on a non-pullback scenario when a red bar is taken out. One is called buying in dip mode or pullback mode. The other is buying in breakout mode. Keep these ever so important points in mind, and I believe it will be hard to steer you wrong. This is Oliver Velez, coming at you with another Charts from Oliver Velez session. I hope you enjoy.